Hello viewers, continuing with our discussion of corporate accounting financial reporting practices, we take up some further issues for discussion. The first and foremost is that the Ministry of Corporate Affairs this year on 24th of March brought out a particular notification which would be effective from the next financial year. That is from 1st of April 2022, applicable for all companies across the board. The issue is, the requirement is that every company using a mechanized system of accounting or an ERP must have an edit log and an audit trail which will capture all types of transactions, changes made, reversals made in the entries, any type of modification in the accounts, and it will record the change and the date. And of course, it will capture the person who has made the change. The notification from the Ministry of Corporate Affairs further states that the audit log, the audit trail, should not be disabled and it will continue to capture the details. Friends, parallelly, Schedule 3 to the Companies Act has gone for a massive change with number of important amendments being issued, and these are effective from 1st of April 2021, that is for financial year 21-22 onwards. Now the first is that promoter shareholding need to be disclosed, including the percentage changes made during the year. Trade payables, that is sundry creditors, and aging schedule need to be disclosed, giving facts, giving particulars as to the payables for the MSME sector and the payables to the non-MSME sector. The third is parallel amendment has been introduced for trade receivables and details of immovable property which is not in the name of the company, and of course in cases where, other than cases where the company is a lessee. So those cases need to be disclosed according to the set format. Capital work in progress, aging of CWIP, capital work in progress, need to be disclosed. Intangible assets which are under development in the company need to be disclosed as per the prescribed format. Details of any Benami property transactions now needs to be disclosed under this amendment. And cases where the company is held as a willful defaulter, is labeled as a willful defaulter, details have to be furnished. Parallelly, another important provision is regarding the amendment so far as ratio analysis is concerned. Now, all of us have been calculating accounting ratios, which helps in understanding and evaluation of the company's financial position. But now, all these ratios covering current ratio, debt equity ratio, interest coverage ratio, debt service coverage ratio, that is DSCR, inventory turnover ratio, receivables turnover ratio, payables turnover ratio, and return on capital employed, net profit ratio, and return on equity. These need to be disclosed, and if there is any fluctuation, any difference between this year's ratio and the last year's corresponding ratios by an amount exceeding 25%, then the management has to provide a justification. Parallelly, they need to define for each ratio what is there in the numerator and what is there in the denominator. And finally, if the company has entered into any type of cryptocurrency transactions during the year, details have to be furnished. Last but not the least, in case the company has taken any loan for working capital by a hypothecation of the stock, then whether quarterly statements are filed by the company or quarterly returns are filed by the company to the banks, and whether they are in agreement with the accounts, that is with the quarterly accounts. If there is any material deviation, explanations need to be provided. And last but not the least is CSR, corporate social responsibility. Every company coming within the ambit of CSR now have to disclose what was the amount due as per section 135 of the Companies Act, what is the amount which has been actually contributed, the shortfalls, and the reasons for the shortfall. So friends, we can conclude by saying that corporate accounting, financial reporting is indeed a game not just of numbers, but also tremendous amount of disclosure needs to be provided. And that is why we have moved from the era of accounting to reporting, where stakeholders' trust and transparency is the last word. Thanks for watching.